AUD chart on the weekly time frame, and I began my analysis from the weekly time frame. All right. So what do I want to do? I want to know where price is coming from and where it could be going to, and how do I do that? Through aligning time frames and their respective key levels to observe the order flow to give me a sense of directional bias. So without wasting much time, the previous week was a bullish candle, a bullish expansion week, and why was that? Well, we had mitigated this bullish fair value gap on the weekly time frame. All right, and we're also taking the previous week previous week's low on this consolidation candle. So this was an inside bar consolidation. How we trade consolidations, we want to sweep one side of the range and go for the other side of the range. So that's what the previous weekly candle did. We swap this into a key level and went for the other side and closed bullish. All right. So we want to align that with our daily. This is the higher time frame indicator. All right. You can see the sweep into this key level, and then close through. So how did I wanted to align the daily? So how do we do that? Once we hit a weekly key level, through our time frame schematics, time frame alignment schematics, we want the daily to align in the sense that, simply put, we want the daily to create a bullish daily range or a reversal concept. Okay. Now, when we reverse in price, what we are doing from a key level, what we say that key level has done is price has succeeded in manipulating this key level. All right. So yeah, you can call it a different bunch of things. However you understand it, that's really what works. The function of this key level, the weekly key level, if it was going to hold, how we gauge that is through a reversal on the daily. We can call that a reversal. We can call that a succeeding to manipulate. We can call this a change in the state of delivery. All right, the bullish candles over the down close candles. Right, and that's exactly what we had here. And what did that create? Well, that created a huge. Come on, work with me. A huge order block. All right. Now this is all too huge a zone to trade from. Okay, so basically you use your advanced key level concepts. All right. So going into any week opening, what we want to do is we want to wait for a particular day in the week to hit a daily key level. From there, we can profile the rest of the week. So, what's the first step while approaching any weekly open? We want a daily candle to print inside a daily key level, and we want that daily key level to reverse price or fail to reverse price. Therein, we know that if we're reversing from that point, well, it's a reversal. Is a much better way to put that. It's a reversal. If we aren't, we're failing to manipulate. All right. So we want this. We want this daily candle succeeding to manipulate this weekly candle. That's what we want on a daily time frame. We want a daily level and the aligned time frame to succeed in manipulating. All right. So coming into this week, the first thing I do is I try to grade my days so I can delineate my daily open and just profile price as we progress. All right. So this day opened, and the first thing I noted was, well, the daily key levels that we wanted to be watching. We're watching this level, this daily low, previous daily low, and previous daily high. Okay, so two levels. I was watching this, and I was watching this from the previous day. Wanted to see how price react. This daily level was sitting just below this OCL slash volume imbalance. This was a volume imbalance from the previous week. Closed over it. So I was expecting support and resistance. This was bearish, created from a bearish range, and then bullish closed over it. We're expecting price to either go down from here and then, or respect here to go higher. So the main levels I was watching was this volume imbalance, previous day low, previous day high, and I was watching this extreme zone as well on the daily time frame, and a bunch of others that were just closely related to the concept of a breaker. So that in itself was an A level which price could use to respect, and it was aligning with the previous week range, EQ of the previous week's range. Right, so like if you could cap the whole range, this upper part this middle was the EQ. So yeah, so price opened up, and the first thing we noticed about this day was there was divergence on SMT of previous day high. Right, so which is to say, yeah, on the New Zealand dollar there was this high. Friday's high was being taken by Monday, and Monday was not taking Friday's high on AUD. All right, that was the first sign. So that was our key level that was hit our first. Check daily key level, all right, because we could definitely just see price explode through that zone. So we wanted to navigate price through time frame alignment. So we hit that, and we drop down immediately to our 4-hour time frame. Okay, drop down to our 4-hour time frame, and we had this, right? Let me align this better. As we're taking this, we were also having another SMT at the highest. Okay, so we opened with the first 4-hour candle, so we tried to profile the whole day. We opened with the first 4-hour candle 17, and 17 was forming the highest points of Monday on AU, and what we were watching for was this daily level that we hit. Was it going to break a 4-hour level, or succeed in manipulating, or fail to manipulate a 4-hour level, or however you understand the reversal concept through. Alright, some people call it a breakout, some call it the creation of an order block, some call it the change in the state of delivery. But basically, what you want to see is price disrespect a level, okay, a bullish level. If that was to be a reversal, we needed this level over here to break. Why this level? This was the last created V level before the upside push, so we could see this as potential support for price to go higher. So we needed price to close below if we were to be bearish, and we did that. That was the first signal. And apart from that, we were having a two-stage cracking correlation between the 4-hour highs, okay, which is to say we were having um, while 17 was making the highest candle on AU, on the New Zealand A21. Okay, that's beautiful. 21 was making the highest candle, so we're diverging off these points as well. This is 17 over here. Alright, that's a two-stage cracking correlation. Okay, so it's SMT between the previous day high, SMT between the previous candle's high. That was a two-stage crack confirming this reversal through divergences. Then structure followed by breaking this 4-hour zone. We wouldn't have considered this SMTs to hold if price could not break through the zone. Right, this is what gave us the confidence that we're bullish. So one opened up, all right. Before 121 created a C2 candle, and in a C2 4-hour candle, what we want to see is the creation of a 1-hour order block, all right. And we had that over here. We had that here. So what was that telling us? That the high of the day has been formed through this 1-hour OB, being confirmed with this SMT, alright, between the previous 4-hour candle and between the previous day. So we created this, and then we displaced breaking this 4-hour level. Okay, so we didn't need that no more, and we displaced forming this, leaving behind this gap on the 1 hour. So those were the signs for our trade. We were waiting for the setup to form. What were we waiting for? We wanted price to um, retrace back into a 1-hour gap, alright, for 4-hour expansions to continue to the downside, and that's exactly what we had here. Price retraced into this gap, alright, and on the 15-minute we wanted to pair a 15-minute low, a run of a 15-minute low into a 1-hour gap, and did we have that? Yes, we did. Over here, this was a short-term low, this was a short-term low, and then we ran two of those lows. What was the confirmation? An engulfing candle, or a true change in the state of delivery. Shout out to Boko trades. I hope I'm not pronouncing that wrong for that concept. And that was where my entry was, and I took this entry and I wrote for a clean 1:3, and price delivered to the downside as expected. And for the rest of the day, the sequence kept printing. Get over here. Alright, we had another gap creation over here rather. Alright, we had this, and the cells, we retraced after expanding into retracements, and we wanted to confirm that the retracement is over through what the 15-minute alignment protocol. What was that? We had a short-term low being run into a 1-hour gap. Look at it, printed beautiful. This was a short-term low, a swing high, sorry, a high being run. Alright, buy side liquidity being taken from over here. And what was our confirmation? Our entry was for the bearish candles to close below the bullish candle, and we had that over here. All right, this was terrible trade. Would have taken a loss, so okay, no, we wouldn't have taken a loss. Yeah, so this high that was run over here, and then we had price, this bearish candle closing below these bullish candles, and that was our entry at the bullish candle. Stops on the high, protected swing, and aim for a sweet 1:3, and I think we got filled, and that was that. Alright, so basically that was how we navigated that day. But I didn't take any trades after the first trade because I had a bullish bias and we're coming into dangerous um, daily key levels. Alright, to set the order for the week. Alright, so after we hit this, the next day continued. Alright, now if we were to continue, if we wanted a continuation of the next day, alright, we need price to open and hit a 4-hour key level. I want to watch how price interact with the 4-hour key level on the next day. So going to the next day, let me take this off. Alright, let me take all this off. We have our fresh day. Alright, this was a daily key level, and then price opened up, alright, after expansions into retracements. So we wanted a 4-hour key level to be hit, and we didn't have any 4-hour levels being hit on this daily open. There was no SNC on these highs. Alright, it would have been much preferable if we opened up into this OCL level over here. Let me take this out. Let me put that, sorry, put that here. Alright, that OCL level, this OCL level up here. Alright, but instead we had a retracement, and then we expanded a little bit, leaving behind this A level. Alright, but this A level was not to be considered much of support, because I view this as inducement because this retracement didn't hit any key level, so there was no structure behind this opening. And usually when there's no structure behind any opening, it's more than likely that that price zone will be ran, okay, because there's no interactions, no liquidity interactions with that zone, will be ran out. Alright, let me take this back so that we have our daily open. So we opened and there was no structure being hit, and instead we hit the previous daily low over here. This was the low of the previous day, which was the daily level. Alright, now this daily level being hit, it's usually our target. So after our target has been met, there's no need to trade. We hit that and then wanted to see how the 4-hour would progress off of that level. Alright, so I was watching this level. Alright, this level, this 4-hour level, this A level. I was just watching to see how price would proceed trade, and price came back into it, but I didn't trust it. Okay, so I didn't take any sell setups. Price did come back into it and create a 1-hour order block here, but there were no continuation prints, no fair value gaps being, no displacements leaving a fair value gap that was referenced. Even though there was one here, there was this fair value gap over here, right? There was this fair value gap over here. We disrespected that. We didn't print the 15 minutes alignment sequence inside that fair value gap. No short-term high run. Okay, we did have a short-term high run. Alright, over here we had a short-term high run, but we never had the bullish price closing over a bearish price closing below a bullish candle. Alright, so we never had that, so that was all the more keys. And on the lower time frame, this was just failure swings. Okay, so it was more than likely that this zone will be what's going to be run, and we had that. Alright, so yeah, so price just displaced up. This was succeeding to manipulate. This right here is the reversal concept. Alright, you need to study this to be able to see in price. This was the exact same thing we had over here on Monday. Alright, so this was telling us that alright, order flow has shifted bullish once again, as weekly was bullish, daily was bullish. Alright, now these retracements are over and price is realigning to the upside. Okay, so how I navigated this after we broke out, with this bullish candle, we broke through this A level, then I was very much convinced. Alright, and then we had a 1-hour change in state of delivery, and price was just very lethargic in going towards the upside. There weren't really no gaps for a continuation sequence, except one that we had on the lower time frame, which was the 30-minute time frame. Alright, on the 30 minutes we had a CISD much earlier, alright, confirming that the week of the day had been formed. So treating this as the low of the day to trade away from, we wanted a gap. Alright, a gap or a key level rather to trade away from. Alright, so that was the daily key level. I should take that off. That was the daily key level. Right? I should take this off. Alright, this was the daily key level being hit. So we created a gap over here. Alright, which price so yeah, which price referred to for the formation of a swing point at 6:30. Alright, so 7 o'clock dipped into that candle, and we wanted to see a 15-minute alignment. Alright, wanted to see a 15-minute short-term low being run. Now we didn't have any here, but that's fine because variance 2 deals with SMT divergences of 15-minute lows. All right, so we wanted to see if 7 o'clock ran out any low on the correlating asset, and we drop down to NZ, and we can see that this is the same day. All right, this is Tuesday, and we had this is 7 o'clock on NZ right here. See, the same. This was the reversal, the retracement. This was the reversal. This was 7 o'clock opening, and we ran out this short-term low. All right. Yeah, we ran those lows that were printed and pricing at about 5.15, and yeah. On NZ, well, on AU rather, we had 7, and this was 5.15 lows was all the way over here. So you can see that we're diverging off 5.15 lows, and yeah, so this could be viewed as a what run on 15-minute lows into a 1 hour or 30-minute key level, and that was the sequence. And I took this trade, but I closed because I was on the prop and they don't allow news trading. There was news at this time, right? So come out due at around 2, which was 9. So I held for like an hour tops, 8:30. I was hoping that within the hour we could have got into my take profit of 1:3 standard, right? I was really hoping, and we came very close at about here and began to retrace. And I closed at around here, so price doesn't really get to my break even, and because of the news. But you can see as we expanded to the upside and we hit our take profits, right? So we move into the next day, and with the next day we already have a bullish bias in mind, right? So what are we looking for a daily candle? How do we expect a daily candle to progress? Well, we need a 4-hour level to be hit. Alright, and did we hit any 4-hour levels? Well, not directly on AU. As you can see, 17 opened up, even though we took 13 candle. Alright, we didn't really hit any key levels, which brings in the divergence play. So we checked NZ to see if we hit any key level because it would have been much more preferable if the daily of Wednesday opened into this gap over here. Right, let me just take out this daily key level that was responsible for the 4-hour structure shift, right? Which would have been sweet if we hit here, because you can see we never came close into this fair value gap. Alright, which leads us to check between correlating asset, and surprisingly, yeah, we did have 17 running into its own fair value gap, right? And taking out lows as it did that. Right, so we took out this low and we ran into this gap. We took out 1, 2, 3, 4-hour candles, and then we did the same. We didn't do that here. 1, 2, 3. So you can see we're diverging with the lows. Okay, we're even diverging more importantly with the fair value gap low. Oh yeah, high, whatever you want to call that. It's called an SMT field though. And then what we wanted was for this 4-hour key level, because it's a 4-hour key level, and we wanted it to manipulate the 1 hour. Wanted 1 hour to create a bullish order block. And what did we see? Well, we did see a bullish order block, down close candle, bullish displacement. All right, gaps being created. What else did we want to see? We wanted to see price return to a gap. So we were monitoring the 1 hour and the 30-minute gap formations, and there wasn't really much. Didn't really print the variance the way I would have loved them to print. So on this day, I wasn't really active this day. All right, we had just small retracements, came up into this price action, began to, I think we were watching somewhere up here. Yeah, I watched some of these levels of the charts. I didn't really trade this day. I only took a trade on Monday. So I was watching here. I was watching this bullish order block. Yep, yeah, I was watching here. But as you can see, price referred to this bullish order block, not just for fair value gaps, for continuation entries. We had this, all right, and the whole Asian range has already expanded, so I wasn't targeting anything, especially New York. As you can see, those two just consolidated, all right. So all this is Nigerian. So what did we have? We had 15-minute lows into the what's it called, the key level. Yes, we did. We had all this bunch of lows, all right, and then we had this bullish key level, and then we had price sweep the low from this key level and this place above, right? We were waiting for price to come back in. This would have been the entry right of this high, stops on the low, and well, nothing much, just 3 hours. You see price hit our objective before coming all the way down and closing us out, or closing the day out on a consolidation. Alright, so for continuations, you want to see, alright, we also had this fair value gap being price with being used alongside that bullish OB. As you can see, price just swept into it, displaced. Right, so that was it for Wednesday. Okay, going into the next day, we wanted 4-hour key level to be hit, and honestly, we didn't have any of that. We did have divergences of this low. This was a PSP with a, this was a two-stage, right? Two-stage PSP. This AD was printing a bearish candle, and this SMC was confirming it. All right. So this was a PSP confirmed with an SMC PSP with an SMC, and yes, it was hitting this open close, and I could trust this open close because we're inside this fair value gap. Okay, and this price had already hit this OCL level as well. So yes, I considered this as a valid structural holding point. Okay, so we diverged off the lows, PSP confirming, SMC confirming the PSP, and what we wanted was to, I think, yeah, on this day I took a loss, and I'll show you why. So we had this, we didn't really hit any key levels on this, but on the opposite asset we had hits, and this was also in a fair value gap. So yeah, we did hit the key level, and we're printing off of a key level. So yeah, this was pretty solid, right, for bullish continuations. So we had this, and what we want to see is a 1 hour OB formation, and we had that. What else did we have? We had price returning back to a 1 hour 30-minute K level, either an OB or a fair value gap. So on the 1 hour, we weren't really having any fair value gaps. On 30 minutes, we had this fair value gap, alright, over here, and what we wanted was a run on 15-minute lows. Okay, so we had this low and we had this low, right? We had this low being run out, and we had price closing over here. This was the reversal price point over here. And honestly, I could consider that because on the 1 hour we were already interacting with the whole point of this other block, right? So yeah, we were, alright, this is the entire other block, sorry. So yeah, we were interacting with that, and then we're running 15-minute lows over here. So that was the entry, but I did long AU on this day, right? So had I been long AU, this would have been our entry, stops on the protected low, on the SMC low, and honestly target 3R, right? So as you can see, that was hits, but I think I took the trade on New Zealand because it was the stronger asset showing more bullish tendencies. Alright, we did take this low, so theory or rule of thumb is you long the stronger assets and short the weaker assets. So this was the stronger asset, and this was the two-stage PSP on the higher time frame with the SMC confirming it, and then we had this low being run over here with SMC. Alright, as you can see, and that was the entry. So I took this, and my stop was on the SMC low and targeting 3R. Alright, and you can see price stopped me out, created another divergence with this, another legit setup. Alright, I wasn't really active to see it play out, but stopped me out, but created another value setup, took out this lows, and then we had a divergent price point, a reversal price point, like a bullish engulfing over the last candles candle. That's the entire system, and then that was the entry. This was the recovery entry, but I didn't take that. And well, for the rest of the day, I didn't really see anything worthwhile taking. We didn't engage with any key levels here. Alright, on 30 minutes, okay, this was NZ. Okay, we did interact on 1 hour. Sorry. Price. Right, we had this fair value gap. Alright, and the 5 AM candle opened into it. Alright, and we wanted to see 15-minute short term low being run, and yeah, we had that. We had this low, and then we had this, and that was the entry of this point, right? But I didn't really take this as well. It would have been a loss, right? We first tagged into it, got so bullish, and then we saw through it, the loss. And honestly, that led me not to want to trade. Friday, which was today, right, on NZ, right? But you know, AUD, we had on that particular day, we had, you know, price delivering to the upside, and then we had this fair value gap over here. Let me take this out. Yeah, this fair value gap, and then we're looking for 15-minute lows, and there were a bunch of them, and when we took them out, we had this revergence and price just, you know, capsized. So that was the loss, and that was how I traded the AUD and said I didn't take this. So yeah,